Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my breakdown targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, we are holding below a key area of resistance at around the $100.3 mark, which is now acting as resistance for us to continue gearing up. We are also holding above a key area of support at around the $97.3 mark, where a breakdown to that key area of support, we can either find support and then get another bounce back to the upside in a move that could help us get above the $100.3 mark once more and maybe continue gearing up. And a break below that key area of support at around the $97.3 mark, we can expect a successful retest before we can continue seeing our prices to our next key area of support at around the $94.3 mark. Quant has also continued to obey the ED12 structures. And before I get to the ED12 structures, you can see that after seeing our low on the 16th of June, we saw this massive pump to the upside, giving us a high at around the $117 mark, where you can see that the market was up by more than 22.16%, which was a very nice bounce to the upside. And afterwards, you can see that we have been seeing this massive breakdown, where we are now more than 14.73% down to the lower side. And this move has also continued to align with my ED12 analysis. And if I zoom out to give you my ED12 analysis here on the Quant chart, you can see that Quant gave us a bear market low at around the $40.1 mark. Then we started this impulsive move, having a 5-wave structure to the upside, having the wave 5 giving us a high at around the $229 mark, completing the formation of this larger ED12 count 1. Then we started a corrective structure in the formation of a larger ED12 count 2, where we have been breaking down in this ABC corrective structure, having that as the wave A. Then we have seen that wave B, and have been expecting one more leg down in the formation of this wave C. And I have minimum target areas highlighted on the charts for this second wave using this red target area that I came up with by connecting the Fibonacci's from the bear market low to the high at around the $229 mark, giving me a minimum retracement area for that second wave between the Fib level 0.5 and the Fib level 0.78, between the $135.8 mark and the $81.8 mark. And this is the area within which I'm expecting Quant to give us the low for that second wave. And there are high chances that in case further breakdown that we are seeing on the charts continues, and at some point we lose our significant area of support at around the $97.3 mark, then Quant is going to continue seeing further breakdown, give us a reset of the low for this wave A, then continue seeing further breakdown, giving us one more new low in the formation of this wave C, and also fully maximize my red target area in the formation of this wave 2. And that means that Quant could possibly give us an 80-point-something dollar Quant for it to give us the low for that second wave. And that is the move that I have been anticipating for the past few months here on the Quant chart. And I believe that once you get an 80-point-something Quant, that will be another perfect entry to get back into Quant so that we can be able to ride that massive pump to the upside in the formation of these larger ED12 count 3. And once you have a low in place, I'll be able to give you minimum target areas to the upside in the formation of these wave 3, where I believe the minimum target areas are above the $350 mark, in the formation of that wave 3. So a retracement into this target area is a perfect area to DCA in, and that is not financial advice. So make sure that you do your own research before taking any action. And that is my price prediction update here on the Quant chart. Also taking a look at the indicators on the RSI, we are trading at around the 40 mark. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.